Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings and then maybe turn them into a slightly scandalous drama. Today we're diving into Odyssey Health's latest CES1 filing, an amendment that's giving us a peek behind the curtain of their big plans. This isn't just any filing, it's an update to their registration statement, a sort of official announcement to the world that they're getting ready for something significant. And this particular amendment is like a minor tune-up, fixing some exhibit details and mostly just reconfirming what's already on file. Now, the truly juicy stuff, the stuff that companies often bury a little too deep, starts here in part 2. They're showing us the costs of doing business here, the fees and expenses associated with this whole registration process. We see they've paid a small SEC registration fee of $66. Then there are the legal fees and expenses coming in at a hefty $17,500. This is expected when you're navigating these regulatory waters. And accounting fees and expenses totaling $3,500. Basically the cost of making sure all the numbers add up and look good. Altogether, the expenses tally up to $2,166.75, nothing compared to the potentially massive amounts of money they're aiming to raise, but still good to know where it's all going. Next up, we find ourselves in the realm of corporate governance with a deep dive into indemnification for directors and officers. This essentially means protecting their leaders from getting sued if things go south. They're referencing Nevada law here, outlining the conditions under which their directors and officers can be protected from liabilities and expenses, including legal fees. It's all about ensuring they acted in good faith and believed their actions were in the best interest of the company. And their own company rules, the articles of incorporation, back this up, ensuring they'll indemnify their leaders to the fullest extent permitted by law. They even have the power to buy insurance to cover these roles. Now let's move on to something that always catches our eye. Recent sales of unregistered securities. This is where companies issue stock without having to go through the full registration process, usually to private investors or for services. Back in 2023, they granted a whopping 6.5 million stock options to their internal team, directors, officers, employees, and also handed out 2.8 million restricted stock units. These were either for their hard work or for services rendered by consultants. Looking back at 2022 and early 2023, they issued 2.3 million shares to consultants for their services valued at about 19 cents a share. That's a total of $4,800 worth of stock given away. There's also a story about a $30,000 loan to a consultant for investor relations. This loan got extended a few times, and eventually in June 2023, it was converted into 30,000 shares of common stock valued at $36,000. A small debt turning into a larger chunk of ownership. Then in November 2022, they gave out 1 million shares of stock valued at 17 cents a share, related to an option agreement with Prevacus. A big deal in December 2022 involved a securities purchase agreement with Mast Hill Fund LP. This brought in funds and also involved issuing warrants giving Mast Hill the right to buy more shares later, perhaps as a sweetener or protection. They amended that agreement in June 2023, which involved issuing another significant warrant to Mast Hill for 1 million shares. And also in June 2023, Mast Hill converted $42,000 of accrued interest and fees into another 56,000 shares of stock. This shows how debt and interest can turn into equity, adding to the ownership base. More stock options were granted to consultants in September 2023, this time 25,000 options at a very low price of about 8 cents a share. Another conversion happened in December 2023. Clearthink Capital Partners converted a $17,500 convertible note plus interest into nearly 1 million shares of stock valued at 20 cents a share. This is a significant conversion, again turning debt into equity. And even more recently, in January 2024, Mast Hill converted another $5,040 of funds, interest and fees into 69,500 shares at just over 7 cents a share. Then on January 31, 2024, they issued over 12 million warrants exercisable at 7.2 cents per share. These are essentially options giving the holder the right to buy stock at a set price. In April 2024, they doled out another 2.25 million stock options to consultants at 10 cents a share. And just in June 2024, another 2.5 million stock options at the same 10-cent price. They also issued warrants to a private investor for 3,000 shares at 10 cents a share. All these deals, they're saying, were exempt from registration because they were private placements not offered to the general public. They specifically state that these investors were accredited, meaning they likely have a bit more financial muscle and were acquiring the shares for investment, not to immediately resell them. And importantly, they made sure everyone knew these shares weren't registered and that any resale had to follow specific rules or exemptions. Moving along to item 16, the list of exhibits. This is like a company's filing cabinet, a reference to all the supporting documents that back up their claims. They're filing consents from their accountants, Turner, Stone and Company LLP, and also from their lawyers, Brennan and Associates LLC. These consents are basically their professional stamp of approval saying they agree with the information presented. You'll also notice a lot of incorporated by reference, which means they're not reprinting old documents, but pointing to where they've been filed before. It's an efficient way to manage paperwork. And then we hit item 17, the undertakings. This is where the company promises to do certain things going forward. They're promising to keep their filings updated if they start selling more shares or if anything fundamentally changes with their business and offerings. It's a commitment to transparency and ongoing compliance. They're also stating that any future updates will be treated as new registration statements for the purpose of liability. This basically means they're taking responsibility for keeping everything current and accurate. And if they don't sell all the shares they're registering, they'll formally remove the unsold ones from this registration. It's like cleaning up the inventory. They're also making a commitment regarding how they'll be viewed as a seller to any buyer in the initial offering, covering everything from preliminary prospectuses to free writing prospectuses. It's about ensuring buyers have a clear path to understanding their rights. Now let's quickly glance at the exhibit index. This is a master list of all the reference documents in their filing. We see exhibit 5.1, which is the legal opinion from Brennan and Associates LLC. This is likely about the legality of the securities they're offering. There are numerous employment agreements listed dating back to 2021 with key people like Joseph Michael Redmond. This shows the foundational agreements for their leadership team. They've also included older agreements like a license transfer back in 2019. This shows a history of asset and IP management. Very recent purchase agreement with Mast Hill Fund LP, dated just before this filing in late July 2025. This signals ongoing financial relationships and likely capital infusion. Alongside that, a registration rights agreement with Mast Hill, ensuring they can register their shares later. They've also included their Code of Ethics, a statement of their commitment to ethical business practices, and the accountant's consent as we saw before, and the lawyer's consent again confirming their role in the filings, and a power of attorney, which is a common document allowing certain individuals to act on behalf of the company or its officers. Finally, we reach the signature page. This is where the official sign-offs happen, making the filing legal. Odyssey Health Inc. officially signs off here, with Joseph Michael Redmond, their President, Chief Executive Officer, Chief Financial Officer, and Director, putting his digital signature on it. He's signing in multiple capacities covering the top executive roles, and also as their Principal Financial and Accounting Officer. And along with him, Directors Jerome Casey and Ricky W. Richardson are also signing off, confirming their agreement. So what's the big picture here? Odyssey Health is in full swing, preparing for a significant move. They're showing us the foundational legal groundwork, the financial tie-ins with investors like Mast Hill Fund, and the issuance of securities like options and warrants, a clear indication they're either seeking new funding or structuring a deal. The reliance on private placements and exemptions suggests they're targeting sophisticated investors. The constant stream of convertible notes and warrant issuances points to a strategy of raising capital through debt and equity instruments that can convert or be exercised, potentially diluting existing shareholders but providing much needed funds. The extensive list of previous agreements shows a company that's been actively managing its corporate structure financing and IP rights. It's a complex dance of corporate actions designed to position them for future growth or a specific transaction, all while keeping the market informed through these regular SEC filings. As always, keep an eye on how these financial instruments play out and what this means for the company. Alright, that's our breakdown of Odyssey Health's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.